It is Friday evening, May 29, 2026. We'll be examining the recent market comeback and analyzing the price action of TQQQ over the last 4 weeks. Let's begin with TQQQ's current status. TQQQ hit an all-time high price today at $85 and closed at $84, dramatically above last month's $58. If you bought at $58 last month, you would have made a 45% return within just 1 month. Let that sink in for a moment. Looking back at the full journey, TQQQ hit a prior all-time high of $46.90 on December 16, 2024, before that brutal plunge to just $17.50 on April 7, 2025. The recovery that followed was absolutely spectacular, with TQQQ achieving a new all-time high of $60 on October 29, 2025. However, the landscape shifted dramatically after that. TQQQ dropped below the SMA 50 purple line on November 14, 2025, and then broke below the SMA 200 green line on March 12, 2026 during the escalating US-Iran war. Throughout March, TQQQ was in complete freefall, plummeting all the way down to $37 on March 30. But then something remarkable happened. After the temporary ceasefire announcement, TQQQ rebounded powerfully from March 31 through today. During the past 2 months, TQQQ has shot straight up from $37 all the way to $84. That's a 127% gain in just 2 months. This V-shaped recovery is very similar to the TQQQ recovery we saw last year from April 2025 to the end of October 2025. However, there is one critical difference. In 2025, TQQQ climbed at about a 40-degree angle upward. But this time in 2026, TQQQ has been climbing at about a 70-degree angle upward. This steeper recovery angle is exciting, but it also means we should expect significantly more volatility in the remaining months of 2026. The faster you go up, the harder the pullbacks can be. Looking at this TQQQ daily chart from Finviz, the situation has improved at a breathtaking pace. TQQQ broke above all 4 resistance lines in quick succession. First the SMA 20 line, second the SMA 50 line, third the SMA 200 line, and fourth the prior all-time high resistance line. All 4 levels conquered. These former resistance lines will now serve as support lines if TQQQ pulls back in the future. Remember, TQQQ is engineered to deliver 3 times the daily returns of QQQ, which represents the Nasdaq 100. So understanding the Nasdaq 100's health is absolutely critical to our TQQQ strategy. The market demonstrated incredible resilience from April 7, 2025 through October 29, 2025. QQQ surged from $402 on April 7 to a peak of $637 on October 29, 2025. That rally was truly extraordinary. However, QQQ crashed to a low price of $555 on March 30 during the war crisis. At that point, a death cross seemed absolutely inevitable. Conventional wisdom suggested it would not be easy to reclaim the SMA 200 green line and the SMA 50 purple line anytime soon. However, something remarkable happened. Within just 13 trading days, QQQ was able to reclaim both the SMA 50 purple line and the SMA 200 green line, completely avoid the death cross, and even hit another all-time high. The bulls were back in full force. Currently, QQQ sits at $738, significantly up from $648 last month. That's a 14% monthly gain for QQQ alone. Since QQQ is now positioned above the SMA 50 purple line, we have a strong probability of riding above this level for an extended period, just as we witnessed the sustained rise of QQQ last year from April 2025 through November 2025. Since our channel emphasizes long-term investing, let me show you this monthly QQQ chart for proper perspective. The big picture is truly remarkable. QQQ has stayed above the SMA 50 purple line continuously from 2009 all the way through 2026. Even more impressive, QQQ has been above the SMA 20 black line most of the time since 2009, with the 2022 bear market being the notable exception. QQQ remains well above the SMA 200 green line. Over the past 17 years, QQQ has been in price discovery mode, consistently hitting new record highs. Notice the 3 parallel lines, the SMA 20 black line on top, the SMA 50 purple line in the middle, and the SMA 200 green line at the bottom. This stacking order, where shorter-term averages sit comfortably above longer-term ones, is the classic signature of a healthy, sustained bull market. I firmly believe this 17-year bull market has strong legs to continue for many more years. Now let's talk about what happened this week. The U.S. stock market delivered another record-breaking performance during the final week of May 2026, culminating in a tech-led surge on Friday, May 29th, that pushed both the S&P 500 and the Nasdaq Composite to fresh all-time highs. The technology-dominated Nasdaq spearheaded the weekly advance, largely propelled by a blowout corporate earnings report from Dell Technologies. Dell skyrocketed over 32% after reporting an 88% year-over-year revenue explosion fueled by insatiable enterprise demand for artificial intelligence computing servers. Think about that number for a moment. 88% year-over-year revenue growth. That is an extraordinary number that tells us AI spending by corporations is accelerating, not decelerating. This massive momentum rippled across the entire sector, pulling up competing hardware and computer server makers like Hewlett-Packard Enterprise and Supermicro Computer, while mega-cap heavyweights like Microsoft and Broadcom also posted significant gains. Beyond corporate earnings, broader market sentiment was heavily boosted by geopolitical optimism. Investors reacted favorably to emerging reports of a potential U.S. brokered ceasefire extension with Iran. This helped ease inflationary fears by dropping crude oil prices to one-month lows and keeping the CBOE Volatility Index, or VIX, anchored near a 4-month low. Lower oil prices plus lower volatility equals a very happy stock market. Turning to the economic outlook, the latest GDP Now forecast projects U.S. GDP growth for the second quarter of 2026 at 3.8%, significantly up from the 1.3% estimate last month. This is a massive improvement. For comparison, U.S. GDP growth showed a negative 0.6% contraction in Q1 2025, 3.8% growth in Q2, 4.4% growth in Q3, 0.5% growth in Q4 2025, and 1.6% growth in Q1 2026. The economy is clearly accelerating again. The CME FedWatch tool suggests the Federal Reserve will not likely cut interest rates at all in 2026. Even more surprising, it suggests the Federal Reserve may actually increase interest rates next year in 2027. This represents a major shift in expectations. Just 3 months ago, the CME FedWatch tool suggested the Federal Reserve would likely cut rates twice in 2026. The strong economic data and recovering markets have completely changed the interest rate calculus. Meanwhile, Poly Market shows the perceived probability of a U.S. recession in 2026 has decreased from 26% in April to just 19% today. This is the lowest recession probability recorded since October 2025. Keep in mind that peak recession odds for 2025 hit 66% on Poly Market, yet no recession actually materialized. History appears to be repeating itself. The Fear and Greed Index has settled slightly to 60 this month from 68 last month, still firmly registering greed. We have been at this greed level consistently since mid-April 2026. Sustained greed, rather than euphoric extremes, is actually a healthy sign for continued market momentum. Let's check our portfolio performance. I have not added any TQQQ shares since last month. After buying TQQQ at $43, $44, $45, and $46 in February, I fully expected to buy more TQQQ lower than $35, just as many of you also expected. However, TQQQ rebounded remarkably quickly after hitting $37. My phased investment approach remains straightforward and disciplined. I deploy small amounts of capital when price drops down toward the SMA 200 green line. And I keep the largest portion ready and waiting if price falls decisively below the SMA 200 green line. I also carefully watch secondary indicators like volume, RSI, and MACD to confirm my investment decisions before pulling the trigger. Now, let's review our portfolio performance. Currently, I hold 658 shares of TQQQ with an average cost basis of $30.89. My portfolio is valued at approximately $55,600, with total unrealized gains of about $35,200. That translates to 173% return. This is dramatically up from the 90% return in just $38,500 in TQQQ market value I reported last month. In just 1 month, my unrealized gains grew by over $17,000. My total capital investment is approximately $20,300. My investment plan remains crystal clear. Since December 2023, I've targeted around $12,000 per year. My goal is to commit a total of $36,000 by the end of November 2026, fulfilling my $12,000 annual investment target for the 3-year period. I haven't sold a single TQQQ share since 2023 and don't plan to unless I see unmistakable signals of an imminent, severe market crash, similar to the 2000 dot-com bubble crash or the 2008 financial crisis. My long-term goal remains absolutely unwavering: invest $360,000 over 30-plus years to achieve multi-million-dollar portfolio growth. For the full rationale behind this strategy, watch my video Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-year showdown. My investment methodology rests firmly on 4 core principles that guide every single decision I make. First, monthly investing, consistently committing about $1,000 into TQQQ every month without exception. Second, enhanced dollar cost averaging, or EDCA, buying more aggressively during market downturns and less or not at all during market peaks. Third, sell before crashes. I'll only exit when I see clear, unmistakable signals of a major market collapse, with full intent to reinvest at substantially lower prices. Fourth, no margin. I strictly avoid all forms of debt to ensure financial security and minimize overall risk exposure. Here's the bottom line for May 2026. TQQQ hit a new all-time high of $85 today. My portfolio grew from $38,500 to $55,600 in just 1 month. Returns surged from 90% to 173%. QQQ climbed from $648 to $738. GDP growth accelerated to 3.8%. Recession odds dropped to 19%. The AI-driven bull market is alive and well. The financial markets continue evolving rapidly, driven by relentless technological innovation and the explosive expansion of AI. Our mission is simple and focused: stay laser-focused, maintain unwavering discipline, and remain deeply committed to our long-term investment framework. The numbers prove this strategy works. Thank you for joining this month's update. If you found this analysis helpful, please hit the like button, subscribe to the channel, and activate the notification bell so you never miss new content. Your continuous support gives incredible energy and purpose to this challenge. Until the next update, take care, stay disciplined, and happy investing.